Hello, welcome back to the Laptop Trader channel on YouTube. This is Philip. I'll be hosting this presentation. Again, I'm just here to share my trading experiences and give back to the stock trading community one video at a time. My email contact is laptoptraderphil@gmail.com if you need help or you have questions. This video is for information only and should not be considered investing advice. Caution, trade at your own risk. Most stock day traders lose money. Please protect yourself at all times. Okay, good luck. Again, educate yourself on how markets work. Always keep investing in yourself. Keep learning. This business is challenging, but if you keep learning, you'll get a hang of it. So I just want to talk quickly today about what to study when markets are correcting. So this right now is not a great time to go long stocks in general, as markets are correcting this month in March of 26. So right now the market indexes are trading below their moving averages. So that's the environment or the context of the market at this time. Again, not a great time for buying and going long in general. Now there will be exceptions to this, such as energy and some other areas of the market, but right now in general, going long stocks is a little bit dangerous. Okay, so what to study? Well, we can study price action. We can study previous winners, big winners in the market. We can study price relative to the moving averages. We could study price relative to pivots or former areas of interest. We can take a look at wide price ranges versus narrow price ranges on a chart. We can take a look at areas of price consolidation or bases and what happened previously out of those bases. And then we could do some basic comparative analysis using price charts, which we're going to look at right now. So first of all, let's just take a quick look at markets. Okay, so this is just, we'll look at the 4 top ETFs I watch. We'll take a look here at the SPY. On a monthly basis here, this is a 5-year monthly chart. It doesn't look too bad, right? Price is still above all of these moving averages, above the 12, 24, and 36 month moving average. Okay, but we've been selling off a little bit in February, and here in March we're down about 3.5%. So not the end of the world, but when you look at a daily chart, it looks a lot worse, right? Because on the SPY, basically flat since this period right here, since December of last year. We made the last new high in this market was at the end of January, and then we had some warnings here that the potential for the sell-off was there. We had some selling off here. We couldn't make a new high. Had some selling off here with that wide range candle, and then we gapped up here on this day, put in a reversal red candle, gapped down the next day, and since that point in time, this market has been selling off a little more aggressively on a daily chart. We're definitely trading below all of the key moving averages on this daily chart, which I use on a daily chart. I just use some basic moving averages for context. I use a 25, a 50, and a 100-day moving average on my charts. You can use whichever ones you use, but I just use them as a quick guide. Okay, take a look at the NASDAQ QQQs. Basically the same story, although the NASDAQ was much weaker, as it didn't make, the last time the NASDAQ made a new high was back at the end of October. Okay, you can see here was a lower high, pretty aggressive sell-off here, lower high, all these equal highs. And here was another clue that this was not great. Was here the NASDAQ tried to break out over this 5-6 day period, actually traded above this area, which probably sucked in a lot of buyers, and then after that it just started to it just couldn't hold that area. And then we got this wide range red bar here. And since that point in time, we have not crossed over this 618, 620 area in the NASDAQ. So this market was weak for quite a long time compared to the S&P 500. And the Diamonds or Dow Jones ETF made a new high in February, early February, and since that time has not been able to keep that price level. And you can see price trading below all these moving averages. And similar story with the IWM Russell 2000 index. Again, made a new high mid-January. Since that time, could not make a new high and broke down below these areas. Price broke down below all three of these moving averages and is currently trading below the 100-day moving averages. So that is the market context or the market environment that we have to operate in. We don't create that environment, we just have to react to it. Okay. Now, let's take a look with that in mind at a few watch lists that I created. Okay. Let's take a look at first some of our top stocks from the last couple of years. I call them Super 8 stocks, including Bitcoin. Okay. Now, one thing we can do is sort this list using a performance-based sort. And we can just do end of day, performance-based sort. One sort that I really like to use with large cap stocks or the market is like a percentage change over a month or 5 days or even 3 months. Okay. So let's go to a 1 month change. This is one I use all the time. And then we can go to some charts. So here we have Netflix, right? We can take a look at Netflix. Netflix currently closed this week at about the 24-month moving average. So it's kind of at a 2-year low, really, compared to the high. If we look to the left, we can see this pivot area here. And how does that match up to current price action? Well, that pivot is quite a bit below the closing price. That pivots around the $69 area. Currently, we're closed Netflix at about $95.31. Again, we're in a weak market. And the question is, can Netflix flip up and recover from the sell-off? We won't know yet, but right now, because it's at that moving average, for me, I would say no. I would like to wait and see it get above this 12-month moving average before I would even consider taking any action on any stock. That's just part of my trading plan. So where's Amazon? Amazon, again, is trading here below that 24 period moving average or 24-month moving average. So right now, Amazon has been selling off since November. And so that would be a quick no, I'm not interested in that stock. Bitcoin has been selling off since October, right? And is trading below or at that long-term moving average. So right now for me that would be a no. I don't really like where that's at on the chart. Google, a little bit different story, right? Google had this huge base, broke out in mid-25, had a nice run last year, made a new high in this February, right? But January was a new high, and then February was a reversal down. So even though it's made a new high, it reversed and engulfed that previous month. That's a big warning sign that Google is probably going to be hurt by this market environment. So even though price is above all the moving averages, one it's extended, right? It's up several months in a row. Two, we've got a clue that Google is probably going to be pulling back, and it already has pulled back, even though price is above these moving averages. For me right now, Google would be a no. NVIDIA. Still holding up above all the moving averages, not extended above the moving averages. NVIDIA made a new high in October, but reversed, had an engulfing reversal red candle in November. And since that time, it has not been able to get any sort of momentum to the upside. So right now, NVIDIA would be a no as a new buy. It's just a watch. Time will tell if this is going to flip back up and continue. One of the greatest stocks of all time, but even though price is above the moving average, I would not consider a buy right now with this market environment or where price is at on the chart. Microsoft showing relative weakness to these other major stocks. Made a new high last summer, and since that time, Microsoft has just been selling off and is trading below that long-term 36 period moving average. So that would be a no. Not interested. Apple. A little more interesting than the other ones to me. Made a new high in December. Has had, a decent pullback. Pullback 4.5% January. Was up a little bit in February and then pulled back again here in March. So far over 5%. So, this one is kind of pulling back through price and time. Price is still above all these moving averages. If Apple could kind of just hold on to this price level over the next month or two, and if the market recovers, I could see Apple recovering along with Nvidia could recover pretty easily. If Google pulls back in price and time over the next 2, 3, 4 months, I could see that being a viable opportunity going forward. So you just start looking at these as a comparative tool using moving averages and price and just looking at different stocks, and you can see that even something like Meta, it's pretty easy to compare using a chart, right? Meta made a new high in August last year. Since that time has been selling off. It made a lower high here and is currently trading at that 24-month moving average. So, for me right now, Meta would be weak. I wouldn't want to make that a new purchase. Tesla, looked pretty good until December when it had that topping tail candle and then this reversal down in January. And it's been pulling back over the last 3 months. Price is still above all the moving averages, but we've got a topping tail candle here in March, down almost 3% in March. That looks like that could continue to price sell off. But, it's still one to watch. It had some relative strength versus something like Microsoft, right? So that would just be a quick analysis of those top stocks. Now, let's look at just a different area. So some people may ask, well, that's okay for those major stocks, but does that work on all stocks? Well, yes, technical analysis works on all stocks. So we can just take a look at something like, let's see, where's that at? Let's take a look at something like consumer staples and food companies. I've got some fast food companies in here, okay? And we could sort this list by several ways. We could do maybe like a volume sort to see which stocks traded the most volume for this period of time or that day. I don't normally use volume unless I'm looking at really small cap stocks, penny stocks or stocks under $20 or stocks that don't normally trade a lot of volume. I will use that volume sort to try to get to some better ideas. But in this case, I'm going to use performance. Let's take a look at a 1-month performance for this list, okay? And then we'll go to these charts. So here's a company that's a smaller company, Alto Ingredients, right? We had this long downtrend. You can see the wide range red bars here and here, these pivot areas. You can see this long base or this corrective time period where price traded below all the moving averages. Then we had some pretty tight price action here. We had a volume spike. We had price ignite out of that area. And then we had a 3-month correction through price and time. And then this month we had another igniting candle with igniting volume. So that looks pretty good right now as far as a new idea. Fairly cheap stock at $4.75. One negative on this chart is we are currently at this pivot as far as price goes. So I would expect price to correct through price and time in some way over the next 2-3 months, and then try to make another move higher for this company, especially with this weak market environment. So yeah, but that could be one to watch, right? Just based on price action. Branch Out Food doesn't look too bad. Was the new IPO here. it trades very low volume, not a lot of dollars traded in this stock. So, this would be towards the bottom of my list of interest because it just doesn't trade that much volume. It's traded here on a month, 116,000 shares, 59, 60,000 shares in December. Even on this igniting bar, it only traded, 105,000 shares. So that's pretty low volume, low liquidity. But you could see that due to the market, probably this is already down almost 20% here in March. Okay, so that would be a no. Kroger company looks pretty good. Kroger actually just made a new high this month on earnings. So Kroger looks good, all-time highs in Kroger. So that one would be of some interest to me. Again, even regardless of the market environment, that chart looks pretty good. Starbucks looks a little bit different, right? A little more back and forth. These big wide range for Starbucks. More of a sideways trend there in Starbucks. Lancaster County, similar look in chart to Starbucks, more sideways, right? Price trading below these moving averages, so really no interest in that. And I can make that decision in seconds. Altria Group, kind of had this move up, pulled back through price and time, moved back up, just made a new high in February. If this could maintain this area here, that could be a potential buy above these 2 months, showing that buyers have interest in Altria Group. Let's see, Yum Brands, fast food operator, doesn't look too bad, but I think that's been affected recently by market. Environment down almost 4.6% here in March. Celsius, like a beverage company. Going through this long base here, I got involved here, was stopped here, and then we've got another down month here, almost 17% in March, so that needs some more time to correct. McDonald's made a new high last month. Nice breakout from this base, right? Pretty long base there, McDonald's. That looked great. And then this month, probably due to market environment, down 4.2%. So that looks like that could be a reversal back down for McDonald's based on the market. So what else do we got? I think that should be enough as far as what I'm looking for in charts. But we can, again, comparative analysis, right? We can compare some of these food operators like Starbucks, right? More of a sideways trend or a sideways range of price versus Yum Brands, fast food operator, versus McDonald's, right? Versus something like Wendy's, right? More of a clear downtrend. Price far below all the moving averages. Price in a downtrend. Just made a new low in February, right? Versus something like McDonald's, which made a new high in February. So, you can always look for relative strength, relative weakness, just simply using charts. I hope that was helpful to you, and that will end this video. Again, we're in a market environment where indexes are trading below their moving averages. Not a great environment for buying and going long. Of course, there's exceptions to that. We did some basic comparative analysis using some price charts. I look for areas of consolidation. We look for price relative to different pivots. Looking to the left. We're looking for price relative to different moving averages and price action in general. So these are some things that you should be studying right now during this corrective environment. You should also be getting your finances in order so that when the market does turn up again, later this year, next year, whenever, you are ready to take part in the next great bull market. Thanks again for watching. Again, my email contact. If you have any questions, need help, want to make a comment, laptoptraderphil@gmail.com. And good luck to you in trading and in your personal finance. Goodbye. I'll see you next month.